not crashing, it's stabilizing because it has been rising and rising and rising and rising for many quarters.
Correct.
And these quarters actually, we experienced a second quarter of decline. It means that it is stabilizing. So does it mean that all the MOP flats is going to be $1 million flats?
Not really, not really. They have three characteristics. Are all EC projects affected?
Well, I think most people know not all ECs are affected. If you have purchased the EC sites before, it's good news to you. My advice is that keen buyers, you have to be ready to make your commitment once you spotted that right property.
Hello everyone, welcome to another edition of Realty Talk with CEO Marcus Chu. Hi Marcus, welcome. So what will we be discussing today?
Hello everyone, we are now into the second half of 2026. Can you believe it? It's already half of the year gone. So for this episode, we will be looking into the future, obviously second half of 2026. What's happening in the market today and how should we plan and strategize our real estate move for the rest of the year?
So here's a quick outline of what we will be sharing today. We'll be looking at what's happening in today's market, what is likely to happen in 2026 second half. If you are a buyer, upgrader or investor, what should you be doing in the second half of the year? Okay, so let's start off with today's market conditions. We'll start off with a quick update of what is today's market conditions. So if you look at what's happening today, new condominiums are in high demand. There's also a narrower price gap between the new and resale condominiums. And good news, HDB prices have been down for a second consecutive quarter. So if you're looking to buy your HDB flat, now could be the best time. There's also many more MOP flats coming on stream this year, almost double of last year's supply.
The minimum occupation period.
Yes, that's right. Quite a lot has happened, and so this is likely to have some impact on the market going forward. And Marcus, how did the new launches do in the first half of this year?
Well, new condos and EC launch in the first half 2026, I gotta tell you this, they are all in solid, great demand. All right? This is especially for those well-located projects with many surrounding amenities and those that is near MRT stations. Okay, you may take a look at the take-up rates, all right? Most of the projects at the day of the booking register overwhelming response.
Yes.
All right, some even cross 90% and even close to 100% sold out during the first weekend booking. I think this is phenomenal result, right, Eugene?
Demand is very resilient.
We don't see this happening in the past at all. All right. So what this means is well-located projects, like I said, with surrounding amenities and near MRT, they are all very well sought after. Shall we take a look at the new launch price and the private resale price that you have just said?
Why are new condos in such good demand? I mean, looking at the price gap between the resale and the new condos.
Yeah, so one of the things that we have observed most recently in first half 2026 is that the price gap between new launch price and resale private condos have actually closed up. Take a look at the chart here. Back in 2023, the price gap between the new condos and the resale condo is 908 PSF. And today in first half 2026, the price gap is 784 PSF. So that is narrowing price gap.
So how does this narrower price gap translate into better sales for new launches?
Buyers that are considering buying a private property will have the options to choose between a new launch condo or a resale condo. So for a new launch condo, if that price has stabilized and has not gapped up as much as before, and is quite close to the resale price, so the differential isn't that very big. So it makes sense to go for a new condo, isn't it?
Yes, so buy something new rather than an older property.
Plus, you know, new condos comes with more modern layout, finishes, facilities, and a longer remaining lease. Actually, it's a new 99-year lease as compared to resale condos. That possibly is one of the reasons why buyers put their money in new launches in first half 2026.
With the higher prices across the board nowadays, how do buyers adapt to these new higher prices?
I would say price acceptance. In today's property market, the builders, the developers, they are all watching, they are all monitoring the take-up rates. And if that take-up rate is so good, like what we experienced in first half 2026, which means there is a higher price acceptance, isn't it?
Yes, that is the market price.
What does it mean when there is higher price acceptance? That means buyers is willing to pay or financially strong in paying. In that sense, I would say with all the cooling measure in like TDS, URA, I believe today's household are financially stronger. They are supported by higher household income and also more savings. All the measures like TDS, URA, making sure that all the buyers do not overstretch themselves financially. So what you are seeing is actually genuine demand.
Very little, in fact, no speculation now.
Right, it's driven by fundamentals.
Interest rates have also been declining. This is definitely good news, but what does it mean for home buyers and investors?
Declining interest rates certainly support affordability and allow more buyers to purchase their dream home, but not for long. Because if you take a look at the chart, now that the SORA rate has came down to almost 1%, if you take a look at back then in 2023, the SORA is about 3.7%. So it have came up quite significantly over the last 3 years. Are we seeing more declining interest rate at the moment? I would say the declining interest rate may have been taken into consideration in today's property price already. If there is still declining interest rate, then the market will continue to charge up like a bull. If interest rate were to rise, okay, then there will also be effects on affordability, because the maximum loan eligibility for buyers, besides monthly income, is also based on the current market interest rate, which determines how much loan that you can take out. So lower interest rate at the current moment equals to lower monthly mortgage payment, and homes become more affordable. Okay, of course, last but not least, the lower interest rate also improve buyers' holding power, because your installment is
easier on the pocket. So now it's the HDB market.
Okay, let's talk about the HDB resale market. All right, resale prices decline for 2 consecutive quarters in 2026. Does this mean that there is the start of the downfall of HDB resale prices?
Well, HDB prices have been rising for quite a long time, and 2 quarters of decline is largely seen as price stabilization. So for fear of the market so-called dropping, I think there's no fear, because the decrease is actually very little, 0.5% quarter on quarter.
So we can tell all our HDB owners they should not
worry. Yes.
All right, they should not worry. Okay.
So we're definitely not heading towards any crashing. And with this decline, I think HDB prices are seeing stabilization, which is a good thing for the market in general.
You're absolutely spot on. It's not crashing, it's stabilizing, because it has been rising and rising and rising and rising for many quarters.
Correct.
And these quarters actually, we experienced a second quarter of decline. It means that, and the decline is not that big, right?
Yes, not big.
It means that it is stabilizing. So you can see that the prices has actually stabilized now. Okay, so what does this mean, Eugene?
If we look at the number of $1 million flats, they are still increasing, right? So a lot of people ask, why is this so, even though HDB prices are stabilizing? So the increase in the $1 million flats have largely got to do with the number of MOP flats, which is usually in high demand because they are relatively new and they are also have a long lease left. So a lot of buyers, they actually like to buy something new in the resale market.
So does it mean that all the MOP flats is going to be $1 million flats?
Not really, not really.
So those in the $1 million flats range are those
They have 3 characteristics of a $1 million flats.
Right,
Number one, they are usually located in the mature estates. So places like Queenstown, Toa Payoh, Bukit Merah. Right, these are usually the places where you see $1 million flats. They are also a short walk to either the MRT station or amenities like the mall or a hawker center, food, and even popular schools. Right, so they have to have these attributes.
Right.
And of course, they have to be in fairly new conditions, move in, don't need to renovate, good attributes, maybe high floor, good view, unblocked view. Yeah, so these are the key attributes of a $1 million flat. So Marcus, what does the number of $1 million flats, what's the implication on the property market in general?
Oh, I think it's very important. I think every HDB resale owner wants to sell your property to be more than $1 million, right?
Oh yes, it's always in their dreams.
All right, but I got to tell you the the bad news is not all HDB resale flats is $1 million and above. Actually, how many percent of the resale flats annually that is like $1 million flat now?
We look at the number of $1 million flats, though has been increasing. If you map it against the total transactions, is well below 10%.
So it's less than 10%,
Yeah.
a fraction of the overall HDB resale transactions.
Correct.
Okay, and most of the HDB resale transaction price is way below $1 million.
Majority of the 3/4 of the HDB resale transactions, they are all below $1 million, well below $1 million.
Okay, having said that, your question was, is the $1 million flats matters
Yes.
to the property market?
Yes.
Well, I certainly think so, because if you look at the HDB resale market, it is equity creation. All right, from BTO applications to future resale, the BTO owners actually benefit from subsidized flat.
Correct.
And eventually, when they sell it in the resale market, they make their first pot of gold.
Correct.
Especially for a first timer. So that means equity creation, right? So equity creations becomes the housing ladder for upgrading. So owner will benefit from capital appreciation. And with that capital appreciation, they will be able to use that cash proceeds and the return of CPF to upgrade, which means to reinvest back into another property,
Yes.
having more funds for their next home. That's for the upgraders. Then there's also another pool of seller who sells their flats for retirement funds. So retirees need to right size, perhaps to a smaller flats, and to cash out for that retirement purpose. So if you take a look at the HDB resale market from $1 million flats to non-$1 million flats, and all homeowners have the benefits of creating wealth in Singapore.
Yeah.
MOP flats in 2026 are situated in Punggol with more than 3,002 flats. Queenstown, more than 2,004 flats. Tampines, more than 2,001 flats. Toa Payoh, more than 1,500 flats. And Bedok, more than 1,400 flats. So these are the locations that may witness more $1 million flats. Okay, now we are heading into second half 2026. Let's see what we can look forward to, Eugene.
There's 3 upcoming milestones that we can expect in the second half of this year. So firstly, October BTO will be the last BTO exercise for 2026.
Wow, finally.
Yes.
I thought every month there's like BTO.
No.
Actually, 1 year, 3 times.
1 year, 3 times. So there's also 2 executive condo sites that will be closing. And these 2 sites will be under the new rules which have just announced
the
in
new
May.
EC rules.
Yeah, the new EC rules. So quite interesting to watch what will developers' response be.
Correct.
Will we see lower prices, or will we continue to see a bull run? Right. There will be 2 new condo launches in July. Right, and we'll talk a little bit about this as we go along later. Okay, so very quickly, the BTO market, and in Bedok, there are 2 projects actually just opposite each other, next to the Bayshore MRT station.
And both also in the
Bayshore
HDB town.
Yes, correct. And this is under Bedok, but it's actually Bayshore area. Right, so this will be in the
so Bedok stretch all the way to
Yes, it's
Bayshore.
a very huge area. So it's a so-called the newer part of Bedok. Right. Okay, so this will be quite exciting. So
very transformative,
yes,
because that Bayshore location,
yes, the
we
private
have just witnessed the
the private launches already sold very well. Yes, so we similarly.
So we'll see BTO in the Bayshore area overwhelming as well.
Probably.
All right. Okay.
So the next one, 2 established towns. One is in Geylang, which is near the Mata MRT station. All right, and the other one, of course, in very much favored Toa Payoh, near the Caldecott MRT station.
So do you expect this to be the prime and plus flat?
Probably both will be under prime project, right? Because of their proximity to the town.
Okay.
Okay. So
10 years MOP applies.
Yes, 10-year MOP and all the other restrictions, but I think with these high-profile flats, I think may have some impact on the demand for resale HDB flats in the 4th quarter of this year.
Oh yeah.
Primarily those first-timers, right, will definitely want to put their focus to try their luck here.
Right.
See whether they can get a slot.
Okay, so talking about ECs, how about the EC market?
As we know it, EC rules were changed in 8th of May.
Yes.
So the question is, are all EC projects affected?
Well, I think most people know not all ECs are affected, because after and before the announcement of the new EC rules on 8 May 2026. If you're a developer, if you have purchased the EC sites before, it's good news to you.
Yes.
Those who are going to purchase after 8 May 2026, obviously they'll be more cautious and they have to take in consideration of all the new EC's ruling in order to calibrate their bidding strategy. There are currently 5 upcoming projects not affected by the new rulings. If you really want to buy EC, you should buy one of these 5 that is up and coming in the launch pathway.
Marcus, there are 3 sites that are affected by the new rules, right? So the tender for 2 of them will close in the second half of 2026. And one more EC site will actually launch in the December this year.
It'll be interesting to see how is the land tender will be like. The tender result will be a good indicator of how developer view the new rules. Let's continue with second half 2026 new launches.
So these are the new launches that will be coming on stream in the second half. We are expecting overall total about 3,600 homes, of which there are only about 3,200 condo units, all right, that we launch in the second half, plus one EC project with about 420 units under the old EC rules.
Okay, and 11 landed new homes.
How do you think this will impact home buyers, Marcus?
Okay, I think there are limited numbers of new condos up for sales for second half 2026. My advice is that keen buyers, you have to be ready to make your commitment once you spotted that right property, or else you'll be competing with many interested potential buyers who are also looking at that 3,600 units of new launches. And I got to tell you this, in first half 2026, we experienced overwhelming response for the new launches, as much as 3 to 4 times oversubscribed, which means for one unit, 3 to 4 potential buyers is bidding for it.
Yeah. So you got to really act fast. Do your research, act fast.
Shall we hop into the future trends and discuss what are the key events that will happen in the near future, second half 2026?
We see that there's 4 trends that will probably shape Singapore's real estate market.
We believe every homeowners and property buyers should keep an eye on these 4 trends. I don't think these trends will change the market overnight. I believe these are long-term fundamental shifts, will influence how we live, where we choose to buy, and also how Singapore's housing market evolve over the next decade. Number 1 is changing demographics. Number 2, smart home and lifestyle expectations. Number 3, the future of work. And number 4, prime and plus HDB, a new housing landscape.
So the first long-term trend in Singapore is changing demographics. In today, 1 in 5 Singapore citizens are aged 65 and above. And by 2030, the proportion is expected to increase further. So Marcus, what does an aging population actually mean for Singapore's housing market?
An aging population will reshape housing demand. I actually think that this is one of the most important and underrated trends affecting our housing market. So when we talk about an aging population, most people immediately think about healthcare. As you age, you need healthcare. But I think about housing. Okay? Because as people move through different stages of life, the home that they need also change. So when you're young, you have a different expectation versus when you are more senior. So the thing is, barrier-free access, smart home features, live access, proximity to healthcare. I think these are the considerations, all right, that is becoming increasingly important, all right, especially to the builders and the developer. All right, these are some of the things that seniors prefer. And if they are really buying property and downsizing, they'll be looking at all these facilities and features in their condominiums.
So they should be designed for the end user in mind.
Secondly, I also believe we'll gradually see more right sizing. Okay, because aging populations, as you said,
don't need such a big
beyond
house.
2030 onwards, there is 1 in every 4 are above 65 years old. So some homeowners who have lived in larger HDB flats for many years may decided to move into
smaller homes.
Yes, smaller homes that are easier to maintain.
Yes.
Okay, so this create another source of supply for family size resale homes. So for HDB resale market, those who want to buy a bigger HDB flats, perhaps in the next few years,
More stock.
the retirees that are selling their bigger HDB flats, the supply will have more 5-room flats or executive flats for the upgraders. Thirdly, I think we will also be seeing more housing options developed for seniors. So whether is it assisted living or integrated senior communities will continue to evolve. Okay, it's not just demographic trends. I think it's a housing trend.
Yes.
Seriously, in Singapore, in aging population Singapore, these are considered one of the most important housing trends. So part of what we just discussed is the shift of demographics, right?
Yes. There's another trend emerging. Actually, household sizes are now becoming smaller. Statistics show that the one-person households are increasing, while larger family households actually are gradually declining. Right. So there's a shift in the household size. What does this mean for the housing market?
Okay, as you can see, 2015 versus 2025, the number of one-person household has been gradually rising. And two-person household also seems to be rising. Three-person household, okay, and four-person, all right, steady, 5-person, and 6-person. Okay, so the one that is rising is like 1- and 2-person household is like rising. So I actually think that this is one of the strongest long-term demand driver for housing. Okay, many people actually assume housing demand depends on population growth. Actually, it's about household size too. When you say household size, means how many people stay in one unit?
Yeah, number of households.
Right, so you call number of households, right? So how many people stay in one unit? So now it's like not whole kampong stay in one house,
Yes, they split.
Yes, they split. Household formation is equally important as compared to population growth. Okay, so if one family of 6 become 3 household of 2 people each, if the population hasn't changed at all,
You still need more homes.
we still have to need more homes, right?
Yep.
Okay, so now we need, instead of 1 home, is 3 homes for. So that's why housing formation is such an important structural drivers for demand. And now, here are the 3 points. Firstly, we will continue seeing demands for more homes, even if population growth moderates, right? Secondly, buyers are increasingly looking for practical 1 or 2 bedrooms homes that will suit their lifestyle and budgets. Thirdly, developers may gradually adjust their product mix by providing more efficient layouts to meet the needs, or rather the changing needs. So even if population growth slows over time, as long as household formations continues, Singapore will still need more homes. All right, that's why I remain confident in the long-term fundamental of our housing market. Okay, let's take a look at future trend number 2.
So every year, Marcus, ERA, we conduct a My Dream Home survey together with the Ngee Ann Polytechnic to understand what Singaporeans really want in their future homes. One interesting finding that stood out very clearly, so across all age groups, buyers are no longer just looking at location and price. They are also thinking about how their homes will be able to support their future lifestyle.
Right.
So what do you think about this finding, and what does it mean for developers and home buyers?
If you have asked buyers 10 years ago what matters most, I think the things that they will say is like, where's the location and where's the price? Today's, the buyer's expectation is different. They are asking different kind of questions like, how will this home support the way that I live over the next 10 to 20 years? Or perhaps it's like, what's the layout, what's the lifestyle like, what is the theme of that condo, and so on and so forth. So across every age group, I think flexible layout emerged as the most request feature in the My Dream Home survey. I think that's because our lifestyle are changing, and we are also much more informed, much faster than before in decision making, as long as you have spotted that right property. Because information is very congested and dense. So people are very informed.
Yes.
They know what they want. So a spare bedrooms today may become a home office tomorrow. My second observation is we are seeing growing demands for smart home features. So buyers are increasingly appreciating homes that improve convenience, security, and energy efficiency. The third observation is more buyers are considering how energy efficient appliances, sustainable materials and greener living. They're not talking about clubhouse, they're not talking about swimming pool, they are talking about more sustainable, environments.
Yeah.
Well, of course, all these may perhaps reduce long-term running costs. Maybe you have more solar panel in the development. So the MCSD will also charge you lower maintenance fee. So from the surveys, I think the homes of the future won't simply be bigger. All right, it only means that it is more smarter,
More efficient.
it is more adaptable and more sustainable. And of course, I think buyers are purchasing lifestyle. In today's developments, lifestyle is a must.
Yes. Marcus, another trend that is likely to reshape our society is artificial intelligence.
Yes.
Yeah, AI.
Yes,
right?
this is a sexy word.
So as we know it, AI is already transforming the way we work, the skills that employers look for, and even the way people build their careers. So how could this eventually influence Singapore's housing market?
I don't see AI as simply replacing jobs. Okay, perhaps in 2026 and also perhaps in 2027, but throughout history, every major technological advancement have changed the way people work. All right, maybe we take a look at the past 20 to 30 years before we even know there is a World Wide Web, how we work, versus now everything is available online and digital, how we work. It's just that the way we work has changed, right? So I think it's important to perhaps reflect on what happens in the past and what's going to happen in the future. So I think point number one is people who continuously upgrade their skills, all right, will continue to create opportunities for themselves. If we all talk about AI now, if you don't know what is AI, then you will be left behind. So you got to continue to upgrade yourself to go and understand and be trained on artificial intelligence. Next is, I think income will remain one of the biggest driver of housing affordability. Stable employment give people the confidence to buy, upgrade, and invest. So if someone is still employed and with the ability to adapt and use artificial intelligence, obviously the employability is even better, which means income is even better. So affordability for housing is even better. That's why Singapore has invested heavily in lifelong learning through programs like SkillsFuture. And at the same time, AI is creating new opportunities in sectors such as semiconductors, digital services, and advanced manufacturing. So I don't think that the future belongs to AI, but I think the future belongs to people who knows how to use AI. So how will this relate to housing? So housing has always reflected economic confidence. So as long as we know that as jobs evolve, housing demands will also evolve together.
Okay, Marcus, the fourth trend. Prime and Plus HDB flats have introduced a new housing model with tighter ownership restrictions. So what do you think the long-term impact is on Singapore's housing market going forward?
So I don't expect an immediate impact because these flats have only recently been introduced, right?
That's right.
But over time, I think this will be a trend that we have to watch, because firstly, owner needs to fulfill a 10-year MOP, right, before they can sell. So that naturally delays the upgrading journey. So in the past, no need. In the past, it's 5 years. So 5 years later, you can do upgrades. So the upgrading journey has been delayed. Secondly, subsidy recovery means part of the resale proceeds goes back to HDB. So that may reduce the equity available for the next property purchase. Originally, right now, if you can buy a bigger unit because of that cash proceeds, in the future, it won't be, because that cash proceeds, some part of it will have to go back to HDB. Thirdly, resale eligibility conditions, okay, including income limits for eligible buyers, may narrow the pool of resale buyers. So you know that the prime and plus flat in the future, if it were to be in the resale market, there is income eligibility.
Yes, the resale buyer has
So
to
there's
be
an income ceiling, right?
income ceiling.
So the income ceiling currently is 14,000.
Correct.
But we don't know what is 10 years later. Okay, it could be higher income ceiling.
Yeah, maybe.
Then eligibility also, which means someone that is earning higher income than 14,000. If HDB were to change the rule, then you can buy at a higher price. So if it still stays at 14,000, then the price that you're going to pay will be capped in a way if the potential buyers of the resale flats don't want to pay upfront cash over and above what can be loaned and paid by CPF. So what this means is resale prices could become more moderate, which in turn may affect the funds available for upgrading. So taken together, these measures may gradually reduce the future flow of HDB upgraders into the private residential markets. It's not something that we will see overnight, but I certainly think that this is a trend that I believe the market will experience. But it's yet to see. We have to monitor. One of the reasons Singapore private residential market has always been so resilient is the steady flow of HDB upgraders. Won't you agree?
Yes, that's right.
Any kind of policy that change the flow is something worth paying attention to. Okay, like this prime and plus flat. Actually, I think it will change the flow,
Correct.
of the future upgraders' ability to upgrade. So of course, Singapore housing policies are designed to achieve broader social objectives instead of just upgrading, okay? And they have served the country well. Our role is simply to understand how these policies may shape future buying behavior and prepare accordingly. Okay, but it's yet to see in the next 10, 15 years later.
Yeah,
okay.
It'll be at least 15 years before these flats hit the resale market.
So what should you do next?
For first-time buyers, they should be considering the HDB BTO market, because the BTO is the most affordable housing option, especially taking into consideration government subsidy and grants. First-timers will probably have higher chances of getting the flat. The system is very geared towards first-timer.
So it's priority access.
Priority access, correct. And of course, it's a strong foundation for the future for upgrading. So of course, if you buy a standard flat, then you're still with the 5-year MOP. That does not affect your timeline to upgrade if you want to upgrade later. So that it allows you also to build equity, right? Whether whatever BTO flat you're buying, whichever location, it allows you to build up your equity to move into your next home. Yeah.
Okay, so this message is for all the first-timer out there with the intentions to buy your first BTO flats. Remember, your first property doesn't have to be your dream home. It simply needs to be the right first steps for future homes.
What should upgraders do then? We talk about what should first-timer do. So what about those who are upgrading from HDB? What should they do?
Well, if you are referring to upgraders, applying for BTO flats, I think the second-time buyers have a limited chance of getting that BTO, or even sales of balance flats, or even EC. Okay, with the new EC
rules is first-timers.
All right, from 70% to first-timer to 90% to first-timer, is really a small pool of supply for upgraders.
Correct.
I think it's important for upgraders to be realistic, because if you hope for the best, then you may not get at all, because there's always that limited pool of supply of BTO, sales of benefit and EC, and in fact, it's always oversubscribed, hugely oversubscribed. Also, second-timers may exceed the household income ceiling of 14,000, okay, for BTO and 16,000 for EC.
Okay, so if there are so many MOP flats this year and next year, what do you think about it?
So all these MOP flats are an opportunity for second-time buyers, which is the upgraders, to buy an almost brand new flats, because they only stayed for 5 years from the first owner who had bought their BTO flats. So you don't have to go through the whole BTO application process, which is, done by the first-timer 5 years ago or so. So many buyers are concerned about affordability also. So resale HDB might be the most affordable options as well, okay, for second-time buyers. Like you said, majority of the HDB resale flats is way below $1 million, probably in the range of 500,000 to 800,000.
Correct.
All right, that's the price range of the HDB resale market. So the resale HDB will be more affordable options also as compared to private property.
That's right, I agree. Because if you look at the HDB prices, based on what we're seeing, the price index, they have largely stabilized. So it's a good time.
It have actually decreased for the past two quarters, as we said earlier on.
Yeah.
So now it's become more
acceptable prices and more easy to enter the market. What should the investors be looking for, Marcus?
I think under the master plans, many areas are transformative neighborhoods.
Yes, transformative neighborhoods, and these neighborhoods are planned in such a way that they can generate long-term capital appreciation.
I think that capital appreciation comes from transformation. So when there is infrastructure change, when there is improvement of transportation notches, such as MRT stations, all these will bring about catalysts for price growth. So that's long-term capital appreciation. Investors might want to look into homes in what you can find in master plan, where there are transformations going on. Also, there are 2 new condos launching this month.
Yes.
Okay, that are in that transformative neighborhood.
So just last weekend, we saw the launch of Langtor Garden Residences in the Langtor area. So as we know it, the Langtor area, this is not the first launch there. So the Langtor area, if you drive there today, has come along very nicely, and all the condos are coming together. So from a relatively undeveloped area, it has now transformed into a very nice neighborhood. So this is one very good solid example of what we call a transformative area, where from nothing became something very, very exciting. Coming up this weekend will be Danian House. So Danian House is located in the Bukit Timah Turf City area, the former Turf Club area, and it's along Danian Road, very near to the 6th Avenue MRT station, and just a very nice size of 380 units.
And this is the first development
Yes,
in the
area.
Turf City.
Yes, correct.
It's really transformative.
Yeah.
And if this is the first development launch,
Very good chance of first mover
advantage.
advantage. Yeah. Just as what we have seen in the Langtor area, right? The first, second, third development. So Marcus, before we end the show today, what are the 3 important takeaways?
firstly, price, we all can see it has stabilized. There is no major price gap up or quite steady. In fact, as you can see, even HDB resale market and private resale and private new homes have also moderated. Secondly, demand for housing remain strong, really strong. As you can see, the take-up rate is so strong.
Yeah.
That means fundamentally those who are buying are genuine homeowner.
Yes.
So they want to buy to stay, and perhaps they are not those who are buying to speculate. Finally, my advice is time in the market beats timing the market. By waiting, you may miss opportunity. And to purchase the ideal property now, if you are financially okay, I think you should take action.
Okay, so that's all we have for this segment of Realty Talk. Do leave us a feedback by scanning on the QR code. So Marcus, to our next show, we just want to say thank you everyone for joining us today.
All right, thank you, Eugene. Thank you everyone for tuning in.